All right, welcome back to week 3 of Mastering Money Management with Urban Forex. Now in this video, I'm going to be talking more about conservative traders and how they should be measuring opportunity. Okay, it goes very close to the previous video that we talked about for aggressive traders. However, conservative traders for this particular example only, I mean as traders who are waiting a little bit too long for the moment. Okay, so for example, a conservative trader might be one that waits for the whole situation. So let's say he's looking at this downtrend, he or she's looking at this downtrend, and he's looking at this as give me a better price and I'm going to sell also. Okay, give me a better price and I'm going to sell also. As it comes up, a conservative trader is like, definitely no, 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 no. It's too aggressive. I'm not touching that with a 10-foot pole. I'm not even getting close to it. Goes up again, struggling, slows down a little bit, and they're like, okay, I'm still not trading it, I'm watching it. Okay, at this point, it jumps down, pulls back a little bit. At this point, aggressive traders are getting very, very active, but conservative traders are like, I don't trust it, I'm not sure yet. I'm aware of the landmines and support and everything, etc., etc., etc. Now, conservative traders have two sets of timings of when they get in. Furthermore, there is some more further slowdown, and is around that time they say, okay, that's good enough for me, and that's when they get in. The other place where they get in is once the break of the low happens, so they're like, okay, now I'm sure the sellers are here again. Okay, these are the two spots conservative traders are more inclined to get in because they need that extra confirmation to tell them, okay, now. Okay, now there's a problem with this because the previous one, where the entry is happening here, every now and then the trade the market will jump up, spike them to a stop loss, come right back down, making them in the futuristic trades, making them stand by, awaiting for a spike, saying, when a spike comes, I'll get in, otherwise no. And then 50-50, 50% of the time, the trade just leaves without them, and 50% of the times they get in after the spike happens. And they're like, oh, perfect, that's what I was looking for. Everything else looks fine. I guess that's okay now. Okay, so conservative traders, one of the things that you need to look out for and you have to do is you have to take advantage of your patience. Okay, you already have a good thing of being patient, but you need a balance between aggressive and conservative. You need your yin and the yang to come into a nice balance to take an ideal trade. It's almost like if you're looking at your cell phone, okay, and on your cell phone, some people might call it bars, some call it signals, some call it reception. On your cell phone, let's say you have things that look like this out of 5, right? So you're missing 2 more. Out of 5, you have 3 bars or 3 reception bars there. Now you're holding your cell phone, okay? You move your cell phone a little bit to the left, and you're seeing, oh, it went down to 2 bars. Oh no, so that's not it. You move it a little bit to the right. You went up to 4 bars. Like, oh, interesting. You move it a little bit more to the right. You go down 3 bars. And you're like, oh, no, go back a little bit again. Okay, that's the sweet spot right there. Trading is exactly the same thing. You don't suddenly take your cell phone and saying, okay, new strategy, new everything. I'm going to put my cell phone right here because there's a higher chance of me. No. You have to go very carefully to do the fine tuning to find out where is this sweet spot. Where is it? Okay. And then as the reception picks up better and better, you now have access to the world where you can now tap into the opportunities of the market. Okay, so trading is exactly like that. You need the balance of both worlds, and it needs to be fine-tuned right in the center of conservative and aggressive. Okay, so in this particular case, let me clear this out. As we're looking at this entire situation, what we're trying to do for conservative traders is as the moment activates for the sells. So in this case, when the Buyers come in struggling, sellers come back hard. So sometimes around here, the trader might get interested. Right here, conservative trader might get interested. The other spot is around here. Once that support finally breaks, the trader might get interested in this spot as well, thinking, okay, I think that's good enough for me. Looks like they're getting ready. Okay, so this price is 22. Okay, I'm just going to write that down, 22. Okay, and this, let me just put a horizontal line. That'll be better. Okay, and that price there. Okay, these are the two different opportunities. Let's first discuss the first one. Okay, the opportunity on top. Now remember, the ATR at this stage we're looking at is 10. Okay, if the ATR is 10, you're looking for what kind of take profit are you looking for? So 2 times 10, right? You're doing 2 multiples, which means 20. Okay, so you want to do 20 plus your spread. Okay, you want to take care of that spread a little bit if you can. So we're looking at approximately 21, 22 pips down. So we're looking at around 20 or 22. Okay, sorry, well, what price was this? 44. So you're looking at 24 to 22 price. So 24 is here, 22 is a little bit lower there. So around this red line is your take profit. Now, if that is your take profit and that is your entry, what kind of stop loss would you require for something like this in terms of risk reward? For conservative traders, because the waiting is being done for so long, a single ATR is sufficient. Single ATR is sufficient. If it is not above resistance, you want to put it above the resistance. So in this case, so if 10 is the ATR, from 44 we're looking at 54. Okay, and you will see that price is slightly below the resistance. You want to just pop it up above resistance, putting you at 11 pips, maybe 12 pips right there. Okay, that is your trade opportunity in this whole downtrend pullback, and you're preparing for a sell. Okay, that is going to be your first attempt. Okay, now if, for example, you're the second type of trader, conservative trader, who's waiting for an extra confirmation, show me you're going and then I'll take the trade, which is this price here. Okay, let's move that down to that price. So let's say the trade is looking to get activated at the price of 22. This one you cannot do because you're looking at, if you are one of those who are waiting for the price to initially make the move, one, you should never enter the trade at this price. Two, you have a 50-50 chance now because now you have to wait for a test to happen. Okay, so for example, if this is your price here at 22, and you're looking to go down 22 pips, right? We're looking at the price of approximately, wait, what is the ATR here? Sorry. ATR is 10 pips. So you're looking at 20 pips lower, looking at approximately 02 or 00 in this price range right here. This is going to be your take profit area, more or less. Seems logical. That seems to be support area. You can pull it up a little bit and saying, I want to make sure I get the take profit. So a little bit higher at 001, let's say. Having that said, you cannot enter the trade at this point because if you do 1 ATR for your stop loss, for 1 ATR, which is going to be 10 pips, 22, that's 32, you are way below your resistance areas. Okay, you're way below your resistance areas. So having that said, you have to wait for a bounce back. Now, this is all resistance area. Okay, you need a bounce back. You can't enter a trade way too early. Let me put this as 2 ATR around here. Okay, 20 pips more or less. Yeah, but you cannot take this price because you need your stop losses to be above this resistance zones. Okay, so you need a price to come up at least into this area. your take profit still looks a little bit healthier. You need that pullback to happen. You need that test to happen. And you have to see, is this sufficient enough? Okay, in this case, am I gonna get stopped out here? Is this where the sellers are sitting? Okay, and you have to think about it that way. Where is my resistance? We obviously don't want to use this resistance. That's too low. Where is my resistance? You want to take a look at it and plot your resistance as you can do it right there. And you want your stop loss to be above that. Okay, so if its stop loss has to be above that and you're dealing with a 1 ATR, which is 10 pips only, okay, you want to be able to get in somewhere at around these prices. So you're looking at an entry at this resistance with your stops above this purple line that seems to be holding time and time again. And you probably want to be able to, get a little bit higher to be sure you're able to be above this as well, just in case. So with conservative traders, you have the ability to take advantage of your situations to make decent profits. But those of you who trade after the fact, you have a 50-50 chance of getting this trade. That's why every now and then when you do win, you can win decent amount. Okay? This is not doable by an aggressive trader because of the sheer nature of, is it now? Is it now? Is it now? Is it now? So for an aggressive trader, this is not possible. Okay, for a conservative trader, because there's so much patience, you can actually take advantage of your patience by getting everything ready, plotting everything, measuring everything, and preparing accordingly. Okay, so again, the earlier entry up in this price, you're looking at a 1 ATR that puts your stops above in this area anyways, which is above the resistance. Take profits are down into here. That should be straightforward. Okay. The other ones, when you're looking at an entry here, okay, you're no longer going to take those entries. You're going to have to wait for a pull back to happen. Although, before this green candle happens, let me move the chart a little bit more to the left. Before the green candle comes in, it might look like, oh man, I didn't enter there and now the trade is running away. I didn't enter there and now the trade is running away. So if that comes to your mind, you're like, oh man, but does that mean my take profit was hit? Okay, because it already reached the 0-0 price. Yes and no. Because if this stage already takes off and continues and proceeds to make a lower low going with the original trend, then the flow seems to be in control. It's in charge. You've missed the trade. But if it hasn't, then you need to work on, well, this resistance couldn't make a lower low. We're gonna get a price higher. And if we're gonna get a price higher, I want to be able to put my stops above my next proper resistance. Okay, if I put my stops above the next proper resistance, I need my entry. If it's one ATR away, I need my entry a minimum of somewhere in these prices. Okay, and then waiting for that moment to come in is random. It's rare, but it's like I would almost say it's like a 50-50 chance. You have to be very careful of when do you actually get that opportunity. When do you actually get that opportunity? This happens time and time again. You can take a look at this area as well as you're looking for pullbacks, but you're not doing the buys until it actually starts to take off. Then you're saying, give me a test back and then I'll see it. Okay, so in this case, conservative traders are looking at this as, I'm not touching that, I'm not touching that, I'm not touching that, I'm not touching that. I know it's an uptrend, but I'm not touching any of that stuff in there. It comes down, I'm definitely not touching that. And then it goes up very hard and you're like, huh, okay, looks like the buyers are back. But if the buyers are back, I can't really take a trade up there. I know now it's activated because it's gone above. It's gone above and beyond, just like here, right? It's gone below. It's broken that thing. Looks like the buyers in this case are back. So if the buyers are back, our ATR here says 10 pips again. So let me put this for a buy position. So if my ATR is 10 pips and I need to put my stops below my support area, okay, if I put my line there, put it at 10 pips, 10, There we go. 10 pips. Sorry, right there. I need a minimum price. If I want to put my stops below this thing, I need a minimum price of this right here. Okay, which is 42. That is a minimum price I can accept to do the buy. Okay, and then I can take it up for a higher high from that. But if I don't get that price, I cannot do that buy. So for aggressive traders, they're going to be pulled into this trade already because they're going to feel it's already left. Conservative traders, because they're scratching their head still, you can still wait for the opportunity to come to you as a test back and saying, oh, there's my price. You'll have to sit through this a little bit and then you'll be able to make your profits. Again, there's a lot more profit to be made in this way, but this doesn't happen all the time. It won't come in to fill you in all the time. Okay? So that's the difference between trading aggressively, how to measure your performance, and trading conservatively. So conservative traders, the best things for consistency is these type of trades here, where you're waiting for markets to roll over. You take the trade, your stops are at one ATR, and you're ending up taking approximately more than one, sometimes two ATR. But the flip side of things is, because of that happening every now and then, you might get a little spike out. Okay, and you have to be okay with that. You can't wait for the spike to always come in and then enter after that. You can also do that. That is a choice that you can make. Okay, and if you enter only after that, you know, in this case right here, okay, the spike didn't come in so high because he made a lower low, so the spike is supposed to respect this area. Okay, so when you think of it in terms like that, your trading activity is in this zone, either before or after the spike, but definitely you're waiting anyways for the slowdown to happen. In a range, conservative traders are doing the same thing. They're waiting for some kind of rotation, holding period, and they're like, that's it. I'm going to hit the sell now. Okay? Aggressive traders are like, I'm going to hit my sell right there, right there. Okay? And then some conservative traders are like, okay, perfect. Now I can enter the sell. I got that spike. Okay? So as long as your strategy and your ideology of how you're trying to trade this is solid, then what you need to do is now work on this money management aspect to help you to identify what is the minimum price you need based on your scanning, you know, your X-ray machine. What is the minimum price you need? Okay? It is not about, if I don't take this trade, it's going to go away. No. It is about, what do you need to turn a profit for your type of characteristics? Okay? Let's proceed to the next video.